Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. As you can currently see, we've got a Marabouzu candle coming in play here as the Australian dollar breaks above the 71 cent, but still needs to clear 71.35 with only the high seen at 23. If we do see that, that supports a further bullish case and therefore look for a rally on to 71.80 to 72 cents and reassess from there. The DXY has slipped towards 99.5 near its August lows as weaker employment, inflation and retail spending have reduced expectations for further Fed tightening this year. The RBA remains comparatively firm after holding its rates at 4.35%, with the Governor Bullock maintaining that another increase remains possible if inflation pressures persist. Australian data now takes the centre stage this week as we look to the wage price index on Wednesday and also Thursday's key labour report after the previous release surged to 76.3 thousand jobs, while unemployment holds at 4.4%. With the RBA and the Fed expectations finally balanced, another resilient jobs report could strengthen expectations for the RBA tightening and provide fresh momentum for the Australian dollar as it now stands, as I say, with this Marabouzu candle and the RSI and the MACD supporting with the trend with the ADX to possibly clear 71.35. Another Marabouzu candle when it comes for the euro dollar after clearing the key level of 115.65 and now putting further risk as it looks towards the target of 116.60 area. It is viewed this week that the major catalyst being Wednesday, which is the Fed's July meeting minutes, which may provide further insight into the policy debate after officials voted 9-3 to keep rates at 3.5 to 3.75%. But as I mentioned with the technicals, they are bullish, so let's see if the rally can continue on towards those highs of 116 and reassess. With the Australian dollar and the euro, still be aware that profit taking is still likely to be lurking. Turning to dollar yen, a weaker play coming now after a recent failed attempt with these 4 hanging candles, or hanging men candles to be precise, and therefore looking back towards the region of 158.65. I still feel there is risk underneath around this area, around 156 to 157, where we previously saw back in late July. Let's see how the market plays into tonight. Sterling, well, strong and now challenging the top side area, which is seen around 135.80 or even up to 136.15. The balls are still in play, but what concerns me is profit taking may be lurking. Gold still holding relatively firm after bouncing off the midway point and can still probably recapture that 4,400 handle, rally on to 4,500 and then reassess from there. Wrapping up with oil, it still remains somewhat mixed, but still keeping in the broader scheme of things of $80 to around 83. Overall, though, the market looks a little bit weak from the RSI and the MACD. May see a pullback to the low 80s, but I'm still being a little bit wary in case we see a snap back to 83 to 85. But that's about. Thank you for joining me, and as always, look out for the interest rate report. I hope you enjoy the great start to the new week.